Okay, so Geoff, thank you very much for joining us today. Really appreciate you taking some time out of what I'm sure is a very busy day to come and chat with us about insurance. Now, the first question I wanted to ask you is that obviously we all know about buildings insurance and contents insurance, but which optional insurance policies would you recommend that landlords could take out?
Okay, so there are two types of optional extras, one being attached to the main buildings policy and then a standalone separate policy. So within the main buildings policy, obviously you can have accidental damage cover if you choose to have it. Some policies will allow you to optionally add malicious damage by tenants. Some policies will automatically include it, some just don't do it. And some policies will have a legal expenses extension, either automatically included or as an option. As far as standalone policies are concerned, the main types of products that landlords will consider are a legal expenses and rent protection style policy, and a home emergency style policy will pay for immediate tradesmen to come out to fix an urgent issue such as a leaky pipe or a damaged boiler.
Okay, so there's things that people can do to kind of give them a broader coverage in terms of the property itself. I mean, I suppose just listening to that, and I don't know, I'm probably not alone in thinking this, but I'm always somehow sceptical around some of these policies and how, you know, if I have a leaky pipe and it's going to cost, you know, £300 to fix, you know, how realistic is it I'm actually going to be able to claim on that policy? I mean, are these quite quick to pay out, these types of things?
So my view on all of these optionals is about perceiving the value in it for the individual. And every landlord will have a different view as to whether one type of policy or one type of cover is providing them with value. And my personal experience, I'm lucky enough to have 6 buy-to-lets myself. My personal experience is that if you have a good property managing agent, a letting agent, then you don't necessarily need the home emergency cover, because the tenant will phone the lettings agency 24/7, report an issue with the boiler, report a leaky pipe, and they will automatically get their local tradesman out to fix it. So if you have a good managing agent that's looking after the property for you, you probably don't need the home emergency cover. Legal expenses wise, again, if you've got a good managing agent that's going to look after any rent defaults and the process in evicting a tenant, again, you probably don't need the rent guarantee aspect of the policy. Because bear in mind, a legal expenses rent guarantee is paying the rent that's been defaulted by the tenant after the deposit has been taken into account.
I see.
But a good managing agent will deal with that process for you fairly swiftly. So it's down to the individual landlord as to whether they perceive a risk and therefore a reward in buying a policy that's going to cover either of those things. I personally don't have legal expenses rent guarantee or home emergency on my buy-to-lets because I've got a very good managing agent who looks after that area for me. But I can see why some landlords would see value in that. As far as malicious damage by tenants, accidental damage, that's not so much relating to the managing agent, and many more landlords would perceive having those sorts of covers in place, because obviously they can't predict whether the tenant is going to accidentally damage the property or indeed cause malicious damage.
I see. Okay, thank you. And in terms of COVID, obviously remaining very topical, how has it affected landlord insurances? So are landlords still getting paid, for example, for rental voids at the moment while COVID's going on?
Okay, so COVID really hasn't had a major impact on the buy-to-let insurance market. We are seeing premiums steadily increase because the current market is what we refer to as a hard market. So underwriters are generally pushing rates up, are a little bit more circumspect on the types of risk they're insuring because claims experience is increasing, and therefore they're being more careful about what they insure and how much they charge for it. So we are steadily seeing prices increase. But as far as the actual rent section of a policy, bear in mind a buildings insurance will cover the loss of rent following physical damage to the property. So if there's a fire at the property, and as a result of that, the tenant can't live there for 6 months, the policy will pay the rent for that 6-month period until the property becomes habitable again. Insurance buildings policies don't generally cover rental voids as a result of a tenant defaulting on a rent, or there simply being no tenant in place. That's when a legal expenses rent guarantee policy would kick in if the tenant goes into a default situation. But as far as the main buildings policy is concerned, it wouldn't pay a landlord for rent that the tenant hasn't paid because the tenant has stopped working but is still living in the property. So we haven't really seen a major impact on the rental insurance market as a result of COVID.
So with the rental guarantee, just to stay on that point for a moment, so if someone has a tenant who is unable to pay the rent because they've been impacted by COVID and it's affected their income, would the policies have, in theory, paid out for that to date?
Possibly. The thing to bear in mind with the legal expenses rent guarantee is the rent guarantee part of that policy is there to refund the landlord if the tenant has gone into default and is going through the eviction process. Right. So there was a period back in April where rent guarantee insurance for new clients wasn't available. Insurers stopped selling it because obviously evictions were banned through the courts. Mm-hmm. Those policies have now become available again, so people can now start buying them again, but all of the existing policies would still be providing the level of cover. So to receive the rent payment from the legal expenses insurer, you have to have started the process of the eviction. And of course, the first process is to give the tenant the appropriate notice, and then you're going through some form of mediation process before you actually get to court to do the eviction process. And of course, the court's eviction process is being delayed at the moment. But the insurance policies would be paying out the loss of rent as a result of default as long as that process has started. The other thing to bear in mind with legal expenses rent guarantee is you have to be using the insurer's solicitor to go through that process. Right. You can't have the policy do it yourself, or have your managing agent do it, or have your own solicitor do it, and then 3 months along the line turn around to your insurer and say, right, I've now evicted them, they owed me 3 months rent, can I have 3 months rent please? You have to have used the insurer's process all the way through. So those processes for clients who already had the loss of the legal expenses rent guarantee, they will have been going on through this period, and they would have been paying out the claims, but on the process that the tenant was actually being evicted or was agreeing to move out. These policies would not be paying out simply to say, I'll give the tenant a 3-month payment holiday and then they can stay in my house when they start working again. That's not what the policy is designed to do.
Fair enough. Okay, that's great. Thank you for clarifying that. Now, I know that one of the things that you are able to offer is portfolio insurance, and lots of the people watching this video will be portfolio landlords like your good self. And I've never actually heard of this insurance, so I'd love if you could just explain to us a bit more about how it works and what the benefits are of taking this over a standalone policy.
Absolutely. So you have two options. You can either insure each property individually under its own policy, or you can put them all under the one policy. And I'm a great believer in, if you can put them under the one policy, it's better value. You will generally get better cover. You will generally get a lower premium by putting them all under the one policy. It's also a lot easier. You have one policy, one renewal date, one premium payment, one claims line. Generally speaking, you'll have the same cover across all the properties in one go. So it's much easier to manage, and you will generally get a better deal. Also, if you've got one property that stands out a little bit, is unoccupied, is an unusual construction, perhaps you've got 6 or 7 properties which are professional lets, but you have one student or one HMO or one commercial or semi-commercial property, then a portfolio insurance can normally cover them all under the one policy, as opposed to having to have more than one, because the insurer will view it to say, look, if you've got one high risk property, they may not want to take that on its own. But if you've got 6 standard homes that are on a residential buy-to-let basis, because it balances the portfolio out, they're much more likely to write it, and they're much more likely to write it at a premium that is cheaper than insuring them all separately.
It sounds good. I can't. What's the downside? I'm trying to pick out the catch.
There isn't a downside. This is the beauty about arranging a portfolio policy is there is no downside, because if you do find that one of the properties under the portfolio is causing you a problem on the insurance, so if, for instance, you've got a commercial premises that is unoccupied and the insurer is charging, in your view, too high a premium for it, you can take that one property off and insure it separately if you can find a cheaper premium. But generally speaking, you won't, because you'll get a better deal by having it all under the one policy. Because bear in mind, premiums aren't just being charged to cover the property, they're being charged to cover the administration of running the policies.
Right.
The more policies you have, the more administration you have, therefore the costs are higher. By having one policy, you've got one administration process, and therefore it generally brings the price down.
And I'm just thinking about all the clients that we have who have multiple properties, and sometimes we have people who will own properties personally and some in a limited company. Can you portfolio insure those even though the ownerships are different?
It depends on the ownership. So as long as the ultimate owner is the same,
yeah,
yes, it's possible.
Okay.
But what we can also do is we can still arrange two separate policies, one for the individual and separately for the company, but look at them as a package together. So we can present the risk together to the insurer to say we have 6 properties under this policy, 5 under this. The 6 property portfolio is in the name of the individual, the 5 property portfolio is in the name of the company, but they are the same. We may need to arrange 2 separate policies because of the ultimate owner. Regarding insurer interest, who actually owns those properties, but we can deal with them together, so the insurer can look at them as a package and therefore rate them as an 11 property portfolio as opposed to a 6 and a 5.
That's good, thank you. And my last question for you is, so when I go to take out insurance and I look through the various, excesses, and does it cover legal cover and all the rest of it, and invariably I just choose the cheapest one, which probably isn't necessarily the right thing to do. So I suppose when landlords are looking at buying insurance, what particular conditions should they be aware of and looking out for when they're making their selection?
Okay, so it depends on the level that someone wants to look into the policy. Most buildings policies will cover, in the main, the same sort of things: fire, flood, storm. Most residential policies will also cover subsidence automatically. Some commercial style policies may only cover subsidence if you extend the policy. So checking to make sure subsidence is included is important, but it normally would only be an issue if you're talking about a commercial property where it may not be automatically included. You might have to ask for it as an extension. Excesses obviously are important. Bear in mind you have a varying excess depending on the claim. So your claim for a fire excess might be lower than a escape of water excess, might be different to a subsidence excess. So bear in mind that there'll be multiple excesses depending on the type of claim. Those two are keys. In respect to rent protection, as I've already touched upon, you need to go through the claims process to get them to do the eviction process for you to be able to qualify for it. As far as other things to be aware of, it's down to the individual preferences. It's down to having that peace of mind as to look at the options and make your own decision about how much you're prepared to pay for the level of cover that you're looking for. So some people will be very price sensitive, looking simply for the cheapest policy, irrespective of the cover. Some might want a full-blown all bells and whistles policy and be prepared to pay more for it. There is a fine dividing line between the levels. So for instance, on the loss of rent for a rent following a fire, some landlords will want to pay only for 12 months cover, some will want 24 or 36 months cover. It depends on the individual circumstances as to where they see the value for money in that policy. And my view is our job is to give them the options so that they can then make an informed decision as to what they want to buy and at what level of premium they want.
Perfect. Thank you so much for joining me today. I really appreciate it. And I'm sure that people watching this are going to be, feel a little bit more enlightened about insurance options. So Geoff, thank you so much, and hopefully we'll see you again soon.
Absolute pleasure. Thank you.